Hey everybody, it's Brett from Moonstream Crypto, and in this video we're going to talk about Bitcoin, all-time highs. Is altcoin season coming? Is it here? Is it on the way? Also, we're going to look at the global M2 money supply and Bitcoin dominance and some other cool things like that. So stick around, and something cool at the end I'm going to share with you. So let me jump over to the charts and let's dive in. So basically, Bitcoin hitting new all-time highs. You guys have probably already heard that. Question is, where do we go from here? And so let me just pull up this other version of the chart that we've been following, and essentially, I mean, I've been calling this ever since we were down in here from the original bull flag breakout with projection to 150,000. Now we have a secondary bull flag with the same measured move, the flagpole here, and the breakout pushing straight to 150K. So I think 150K is in the cards and is programmed. And here I suggested we would break above 112,000, and we had a bit of a short squeeze in there, which wasn't hard to project or to figure out, and then they pushed it up, liquidated the shorts, and then everybody went long and they pulled it back and liquidated the longs. So the good news is the leverage is out of the system and things can progress. I did put this on here as a shorter term pullback, or maybe down to 114,000. There's a CME gap there that at some point will likely fill, but it's a lot of strength in this market coming up in the near term. And so with that, there's a siren going by. With that, that's what I suggest is going to happen. A bit of a pullback here into sort of that July 20th low, as it's also a cycle low. And so I would expect to see that. And we could push higher, but probably slows down, pulls back a bit. Good buying opportunity, either in that 116 area, or even back to 114. Both good areas to buy and dollar cost average. A bit of bearish signals on our indicators, and TSI bearish divergence on the RSI Pro. So, you know, look, profit taking is not a bad thing, and it's something that recharges the markets, gives us the ability to push much higher. The good news is all those sell blocks that were there are gone. There aren't any sellers really on the limit books above, at least in the daily time frame. If we look over at the weekly, same thing, looks good. A bit of a pullback, even down to retest this midpoint of the vector candle. Not many people talk about this, but these big candles here where the market makers allow price to go into a new range very often will retest the midpoint. So here's one back in there. Price came down, touched that midpoint, and then went up. If we come down again 114K, that would be a great time to buy back in and then push higher. So with that out of the way, let's keep going. I want to jump over to this. Now, people asking, are we in alt season? No, we are not in alt season. Alt season is up here. We are headed toward alt season, but here's what you may not realize is that this area we're at on this oscillator right around 41 has been a resistance area in the past, and also a support area. If we draw an imaginary line right through the middle, so support, resistance, resistance, support, and now it's going to be resistance. So I think probably what happens, and we'll look at Bitcoin dominance, is that Bitcoin dominance bounces off its 50-day exponential moving average. Bitcoin pumps again, altcoins pull back again, and then we go and we push toward alt season. It's a little bit early for alt season just yet, so we'll keep an eye on that. Here's global M2 money supply, as we've been talking about and following, and I had just recently switched to a 90-day delay. Some people say 10 to 12 weeks. That's 70 to 84 days. That was mostly tracking back in here, but I think in this stage of the bull run, at least for right now, a 90-day offset on the money supply is overlaying very nicely. Bitcoin price here and the global M2 in yellow. So pushing up, we had that little pullback here, and now we're starting to push higher. I think that we could push up into this July 20th area as a selling peak potentially, and then pull back into a cycle low, even right closer to July 21st, 22nd. So we'll see. That doesn't track exactly, I realize that, but my overall thesis is then we push up again into this $150,000 range. Now the price on the right isn't going to correlate to Bitcoin. I'm just showing that, you know, the global M2, the price is related to Bitcoin. I think the push higher on the chart visually puts us in this 150K region or range, and then and timing wise as well, early August. So down below, I think we're going to see a pullback in August, And that's what we see in the money supply. August typically a slow month, and then we build up more traction for that push toward 200,000 Bitcoin and beyond. Uh-oh, did I say higher? I've been saying 150K and 200K as the tops this year, but I have a study that I'm going to share with you again with some more details on how I think we could push a bit higher. Not 500K, not a million, but a little bit over 200K, and I'll show you why. So let's dive into it. Here's Bitcoin dominance, by the way, and doing a bit of a pullback. If we open this up, we remember we had an altcoin weekend back here when back in November 2024. Actually, I was thinking this was altcoin weekend. We're on a weekly time frame. This, of course, back, who knows what was going on there. That was a bit of a scare on the financial side of things. Bounced off that 50-day EMA. We could certainly do that, and that would be on Bitcoin dominance, and then bounce off of it. So giving the altcoins a bit of a chance to rally, and then going back higher, because 70% is the level that last cycle we bounced around and hit a few times. So whether that's where we go or we retest it again, now if we go farther back, it's 100%, because that's before there were any altcoins. So it was 100% Bitcoin anyway. In the next cycles here, we saw this range back on 2017. That 70% range was the top. And then last cycle, we touched it twice. So my thesis is, are we done, or do we push up again, at least to retest 66.5%? Or maybe we see that Bitcoin blow off, or early blow off top to 150, or maybe it's later to 200 and beyond. Either way, this is how the path of altcoins and altcoin season usually plays out. So phase one, Bitcoin, flow of money goes back into Bitcoin. I've been saying for the last couple of weeks, if not months, to get into Bitcoin, and that would be the leader. Phase overlap, money flows out of Bitcoin into Ethereum. We've been seeing that lately, but it struggles to keep up with Bitcoin. Ethereum goes back and forth with Bitcoin, starts outperforming it. So we're seeing the back and forth, right? And then phase two, Ethereum is outperforming Bitcoin, and we hear talks of the flipping, ETH flipping Bitcoin. Don't think it's going to happen, but that's what people start talking about in phase two. We're not quite there yet. And I'll show you Bitcoin. ETH has some sell pressure up above, so I think that's kind of maybe later in the summer. And then phase overlap for that is that money starting to trickle into the large caps like Chainlink, like Compound, and then we see large pushes higher in those tier ones and really solid layer ones, right? So we'll talk about a few of those in a minute. And then, the overlap there is in the phase three large caps, those Ethereum has been outperforming Bitcoin at this point. This is later, it's like September, October maybe, and we'll adjust as necessary. And then finally, regardless of the market cap, some of the altcoins with strong fundamentals, this is not going to be the alt season that we're used to, because there are too many alts. And the last seasons, were 3,000 alts last season. There's like 30,000 altcoins this season. So there's not enough money to go around. We're going to stick to and watch quality altcoins that really have the potential to make it with utility and revenue models and investors, etc. And then you see, the large cap alts kind of going and pumping, as well as when these other ones start to come off. The large caps have gone full vertical. Bitcoin, ETH saw large blow off tops. Money flows out of those. They're taking profits, taking the house's money, and going and playing blackjack, right? So if you're in the casino and you hit roulette, you hit a couple winners, and you got all that free money, what do? You go over to the blackjack table, and then you go play some craps, right? Same thing in the crypto markets. I actually am not a big gambler myself, but I hear that's how it works. And if you hit a jackpot on a slot machine, yeah, sure, go play some roulette with that house's money. Same thing. Large caps have been outperforming ETH, and Bitcoin at this point, it seems like every coin is going parabolic. Memes are everywhere. Everyone's super excited, and you feel the mania in the air. We want to be careful of that euphoria phase, and we'll be advising clients to get out and call the top like we did last time. By the way, if you'd like to learn more about what we do, go over to moonstream.io to figure out what we have there. We have an interactive video that will guide you if you're not sure what level trader you are. Or if you'd like to work with me one-on-one, you can go to moonstreamcoaching.com/start and book a call with me there. All right, moving right along. So that's the path for Bitcoin dominance and what happens next. Here's the study I've been doing for 2 years showing that this target on this cycle is 150K and 200K. How did I get there? If you're new here, I'll just show you. This is the last cycle, the Fibonacci from the 2017 high to the low down here, extended out, took us exactly to the Bitcoin high. This was a bit of a throwover on a Wyckoff pattern, but using this same model and same Fibonacci and 3.618 target doesn't mean it has to happen, but it's a good barometer to see and use as a guideline. So similar to that one, a last cycle high to the low and extended out there puts us at, gives us these targets of 100K, which we hit. That was the 1.618. The 2.618 took us, or will take us, to 150K, I believe, in the coming weeks. This could happen end of July. This could happen right into that early August time frame, and I think we could see a throwover. Now, this blue line is just a overlap of the last cycle here, adjusted for a little bit lower velocity based on this logarithmic chart. So you guys can see that. Fractals often don't play out exactly, but they can give you a good roadmap of what could happen, and so far it's playing out. This fourth and final angle of the parabola potentially is shooting up higher. If the M2 money supply, I called it M3 because that's our M3 active trader course. M2 money supply shooting up, pointing toward higher highs. If we go up here and overthrow 150K, I'll be taking profits there, waiting for a pullback and a likely bounce into the end of August. I think August is a pullback month, and then we get a secondary push up into that 200K region and range. Now, remember these numbers. They're important for the next study that I'm going to be showing you. And so with that, briefly, if you want to see more about the 11 reasons why I think we'll hit these levels, you can go over to Google Brett Fogle at TradingView. I do updates on this study that I've been doing for some time, but these are all the reasons that are slowly checking off of how we're getting to these higher numbers, and certainly political support in favor of Bitcoin. There's corporate FOMO starting to happen now, and corporations starting to really buy heavily into Bitcoin, creating their own Bitcoin strategic reserves, or Bitcoin treasury strategy, Bitcoin treasury. There's all these new terms we have to remember. Anyway, flight to quality, pensions, 401ks, sovereign wealth funds, all on the way. That's what will drive this next push, I believe. So looking at Tether dominance here, we've looked at this before. It is in line perfectly. As stable coins come down, money flows out of stable coins into crypto, inversely related. So we've been watching this pattern, which was just the same as that over here. 4 signs of a market topping. We could spend a little bit more time, a couple weeks in this lower range as Bitcoin pushes higher and money flows into crypto, again into that sort of August time frame. And then I expect to see money flow out of Bitcoin and crypto back into Tether, pushing up into the crypto correction zone. And then in here we have to be careful if we pull back down, and that'll rally Bitcoin again. Maybe that pushes us to 200K. Maybe this comes all the way down to this trend line. But this trend line over since 2018, when prices come, or when Tether gets to that trend line, those are market tops. And so we want to keep an eye on that. And then when money really starts flowing into Tether and stable coins, that's when it's over. Money's fleeing the crypto markets into stables, and then we have crypto correction zone, crypto crash, and bear market. So we're going to keep updating that as we go. Next study here, this is interesting too, because somebody was circulating this chart. I have it in log mode now. We'll come back to that. And somebody was suggesting that maybe we were in the market top zone based on this trend line here from 2017 hitting the tops of the last cycle, and that was before this breakout happened, suggesting, hey, maybe this is the market top. But immediately I said, that doesn't look right. That doesn't look like a logarithmic chart. That looks like a regular analog chart. So by putting it on log chart, which we should do, anything over a year or so, it's going to give us a better reading. Okay, but there's still a twist. So if we do that, from this to that top there, it would put us up to around 350,000. I had earlier estimates of 426. If I were to draw this down to the candle body right here, that pushes it higher, but we'll just do it according to the candle top and make it a little bit more reasonable. Either way, though, I think it's wrong. I think this would be dictated by the rainbow regression band, which you guys are familiar with here. And for the Bitcoin top, this is the revised version, by the way, that is more accurate, I believe, hitting in these. So it's not a straight line. It's a regression band. And based on this, I think we can get into this higher range, though, putting that at 212 to 277,000. I think it's going to be toward the mid-range of that, and I'll show you why in a minute. So with that in mind, let's say that we don't go that high. Well, let's take a look at 200,000. That was the prior study that I showed you, right? The 150, 200K. That would put us about here. A regression band would kind of put that on the lower side, probably not getting into the orange range on the one we just looked at. But here, 247,364, give or take. And I'll show you why that's important here now that I buggered it. 246,500. Now, where did that number come from? Good question. So let's dive into that. I did talk about it the other day. I'll do a quick rundown on this study. This is fascinating. You don't want to miss this. And so looking back at the last cycle, the Fibonacci retracements, we kind of looked at this in the study I showed you before, from the 2017 high-low out to this region here projects. So again, the Fibonacci 3.618 from the high to the low moved over, projected exactly the market cycle top. This was a throw over and a bull flag or a bull trap, and a Wyckoff. Don't worry about that. So from there, though, after this bottom was put in, I started playing around with a fib extension to see what percentage pullback that was. Was it a Fibonacci number? Was it a different number? Well, look at this. This is really interesting. And so we did 2 studies there. And when what aligned with this, I'll turn one of them off for now, with a high, low, high, low, high, and then the pullback from that, okay, was not a Fibonacci number. We looked at 618, 2618, and all the other Fibonacci numbers. And then I just started keying in random numbers. And do you know what it turned out to be? 3.14 or pi. That's the pullback from here down to here. Now, you might be saying, well, what about this is from this high to that low? But this was kind of a more recent low. And then there was this other possible high up here, which is a little bit higher if we wanted to draw it that way. But I wanted to keep it right visually where it was shown. You could see it was pi. And so there's another, we did it that way also. And it came out exactly the same. High, low to here to that peak. And look at that, 3.14 also. So there's something to this, and doesn't mean it's going to happen again, just some interesting speculation. And so if we were to turn that off and do the same study now for the current cycle, let's take a look. So again, the Fibonacci retracement from the last cycle high to low extended out gives us that 200,000 potential up here, which right around 200,000, it's kind of hard to get these things exact. Let's see if I get there right as close as I can get it, and you get the idea. But the point being, 2 things. All right, stay with me. If we want to calculate the cycle high and the next cycle low, let's assume it's 200,000. Let's say it happens again. Let's say lightning strikes twice, okay? Well, that would say, all right, let's look at it from here, the high to low to that high, right? Same thing. Here to 200,000, given that same retracement of 3.14, what does it put us? That would suggest, and I don't think this is right, so we're gonna take it to the final step in a minute. That would take us potentially down to 33,000, 34,000. That would be a negative 84%, which is pretty common in a bear market. But it just doesn't seem, it seems that this is different. So it is a possible scenario. If the top is 200K and that's where we go, then this might be the next bear market low. But really, I think that honestly, it should be probably closer to here. We had strong resistance flipped as support at 74K. Could be lower, but so we reverse engineered it. And by doing so, came up with this. All right, so if the 74 is the next bottom at pi, then that would extend the high to 246,750. This is not going to be exact, and if it is, I'll be buying starting a 900 number and getting a shirt that says Cryptodamus. But it would be certainly interesting to see if that plays out, or some variation of it. You know, wherever the top is, if we know here, and that top, and then we can project maybe to 3.14 as a pullback. Now that might have been a one-off thing, I totally get it, but there's a lot of reasons why this should not go below 74K. It's a cup and handle breakout. This handle breakout here is significant. Also, the price has never gone below in Bitcoin, below where it was during an inauguration of a new president. Where were we at November 5th? Let's see, you guessed it, right in here was right at 74K, and that was the inauguration that sort of prompted the breakout. It was actually also a cycle low, so there was some confluence there, and important number though. So it would seem to me this has some legs. Who knows? We will see. It's too early to tell, but I will keep you posted. So with that, everybody, thanks very much. I hope you enjoyed. Please like the video if you like the content, and because they like that, and the more you like it, the more YouTube likes it, the more they'll share it and show it to people, and that means I'll do more of these. So I've got some other cool studies to share with you. So please hit that like and comment, and push the subscribe thingy, and you know, that way you always get notified. Anyway, thank you guys. Talk to you soon, and big celebration. Just broke 1,000 subscribers, so looking forward to doing more of these with you guys. All right, cheers.